hello, good evening and warm welcome to all of you. This is the second video of my government scheme series. In the first video, I have talked about the important scheme of the Ministry of Labor. Now in this video, I will deal with the different schemes of the Ministry of Finance. But we will look into the different departments of the Ministry of Finance firstly, because UPSC is asking question on the department of the Ministry of Finance also. Now the 5 departments of the Ministry of Finance is Department of Economic Affairs, Department of Expenditure, Department of Revenue, Department of Investment and Public Asset Management, and Department of Financial Services. Basically, in the examination, you may get confused that the Department of Investment and Public Asset Management should come in the Ministry of Commerce and Industry, but this is not the case. It is in the Ministry of Finance. And Department of Financial Services is basically related to all the different schemes related to financial inclusion. Now coming to the Department of Economic Affairs, that what is the function of the Department of Economic Affairs? This department prepares and presents the union budget and also the budget for the state government, which is under the president rule, and also for the union territory administration. In examination, I am pretty sure that you know that the Department of Economic Affairs is responsible for the union budget. But with respect to the state government under the president rule and the union territory administration, you may get confused. Therefore, you should focus on this important point. Now, the second important point with respect to Department of Economic Affairs is, you all know that India receives a number of assistance in the terms of finance, in the terms of technical assistance by the different organizations, by the different bilateral agreements between the different countries. But Department of Economic Affairs monitors only those technical assistance which is India receives except through the specialized international organization like FAO, ILO and UNIDO. Basically, these are the different institutions. If the technical and financial assistance is coming from these organizations, it will not be monitored by the Department of Economic Affairs. And also, whatever the bilateral agreements in the field of science and technology, culture and education is being done, it is also not being monitored by the Department of Economic Affairs. Therefore, you should focus on all the external financial and technical assistance is monitored by Department of Economic Affairs except these two clauses. Understood? Now coming to the very first scheme of the Ministry of Finance is Pradhan Mantri Jan Dhan Yojana. Now the very first question which should come in your mind that when it was launched. It was launched on 28th of August 2014 and under National Mission for Financial Inclusion. They may give the option in this way that the Pradhan Mantri Jan Dhan Yojana is being monitored by the Department of Financial Services, then that statement will be correct. But if they say that the Pradhan Mantri Jan Dhan Yojana is being monitored by Department of Expenditure under Ministry of Finance, then that will be the wrong statement. Understood? Therefore, I have talked about the different departments. Now, what are the different benefits which the beneficiaries is going to receive under Pradhan Mantri Jan Dhan Yojana? The very first benefit is accidental insurance coverage of 2 lakhs of rupees, and also it provides the life cover of 30,000 on death, and overdraft facility. You all know about the overdraft facility. In the initial phase, Pradhan Mantri Jan Dhan Yojana was providing overdraft facility of 5,000, but now it is of 10,000, and that will also be provided only after the satisfactory operation of your zero balance account for the last 6 months. And if you are the beneficiary of Pradhan Mantri Jan Dhan Yojana, you will also get the RuPay card. Understood? Now, this is important information, I think that you all know, but what is important here to focus upon, that it provides platforms for the 3 social security schemes like Pradhan Mantri JJBY, Pradhan Mantri Suraksha Bhima Yojana, Atal Pension Yojana, and also for Pradhan Mantri Mudra Yojana. Now coming to the next slide, that is Pradhan Mantri Suraksha Bhima Yojana. Now, in the terms of any scheme related to the pension, you should focus on important points, that whether there is an availability of exit, whether if the beneficiary or the subscriber of the pensioner will die, what will happen to that account. This is very important to understand, because UPSC is now is now not making question on who is eligible and who is not eligible. They are focusing one step forward. Okay, so but we will have to look into that who is eligible for the Pradhan Mantri Suraksha Bima Yojana. Any person who are in the age group of 18 to 70 years of the age will be the beneficiary of Pradhan Mantri Suraksha Bima Yojana. Now the second thing is, what are the benefits under Pradhan Mantri Suraksha Bima Yojana? The person who has subscribed to the Pradhan Mantri Suraksha Bima Yojana will get a 1 lakh rupees for the partial disability and 2 lakhs for the full disability and accidental death. What is important here to remember is that in the case of accidental death, not the natural death. Understood? Now, the next point, what is the premium to be deducted if one is beneficiary under the Pradhan Mantri Suraksha Bima Yojana? Then he has to give rupees 12 per annum. And the next question is, who will implement this particular scheme? The particular scheme will be implemented by any general insurance company or the general public sector insurance company. Why I have put about the terms of the general insurance company or the public sector general insurance company, it is important because what UPSC does, that they will give you an option like that LIC is the only implementing authority of Pradhan Mantri Suraksha Bima Yojana, then that statement will be wrong. Understood? Now you all know that just I have talked about in the beginning of our slide that the Department of the Financial Services is related to any scheme related to financial inclusion, and Pradhan Mantri Suraksha Bima Yojana is also one of the component of the financial inclusion. Therefore, it is being dealt by Department of Financial Services. Now the next question, is there any facility for exit? If the subscriber wants to exit from the scheme, then that it is possible or not? Yes, it is possible. Understood? Now this is important with respect to Pradhan Mantri Suraksha Bima Yojana. Now we are moving to the next scheme, that is Pradhan Mantri Jeevan Jyoti Bima Yojana. Now Pradhan Mantri Jeevan Jyoti Bima Yojana. Now who is eligible under this scheme? Any person who are in the age group of 18 to 50 is eligible to be the beneficiary of Pradhan Mantri Jeevan Jyoti Bima Yojana. Now, in examination, what aspirants does, that they get confused between the 18 to 50 under PMJJBY and 18 to 70 in Pradhan Mantri Suraksha Bima Yojana. So therefore, you need to focus upon this eligibility condition. Now, what are its benefits? Under this, there will be a coverage of 2 lakhs for the death for any reason. Okay, what we studied in the last slide, that death because of the accidental reason, and here the death for any reason under the Pradhan Mantri Jeevan Jyoti Bima Yojana. Now what is the premium to be deducted here? Rupees 330 per annum will be deducted if you want to subscribe to the Pradhan Mantri Jeevan Jyoti Bima Yojana. Now who will implement this? Again here LIC and other private sector insurers will implement this. What we have done in the last slide, that any general insurance company, whether public or private, can implement it. But this is not the case here. Therefore, you should focus on that what is the difference between the different schemes, because then only you can remember that. Understood? Now again, the nodal department is Department of Financial Services. Now we are moving to the next very important, I will say, very important scheme, that is National Pension Scheme. What is National Pension Scheme? This is basically pension cum investment scheme. It simply means that if you are subscribing to the National Pension Scheme, then that amount will be invested by someone. That who will be that someone? He will be the fund managers. Understood? That the fund manager will invest the amount which is being collected by subscribing to the National Pension Scheme. Now, what are the different sectors in National Pension Scheme? All the central government employees except armed forces. Okay. Basically, UPSC in 2017 have asked this question, that NPS is applicable on all the central government employees except armed forces, and also the state government can implement National Pension Scheme. And on the framework of the National Pension Scheme in the government sector, there is an NPS corporate model also. This can be implemented by the corporate houses. Understood? Now, who can join NPS? Any citizen of India, both resident and non-resident. It simply means that any citizen of India and NRI and also OCI card holders. OCI card holder was not the eligibility criteria 1 year back. It has been recently decided by PFRDA that OCI can also get the benefit of National Pension Scheme. Understood? And this is very important to remember that the age bracket for the National Pension Scheme is 18 to 65 years of the age. Now, who administers it? That is PFRDA, Provident Fund Regulatory Development Authority will administer it. Now, the next question, can NPS account be opened jointly? For example, if I am subscribing to the National Pension Scheme and I am the central government employee, then can I open the National Pension Scheme with my mother, with my wife? No, you cannot open the NPS account jointly. It will be done individually. Now, the important point to remember is that what is the minimum contribution under the National Pension Scheme? For example, you will have to understand that all the central government employees are subscribing to the National Pension Scheme, and every central government employees are getting that much of the salary that they can invest a minimum contribution of 6,000 rupees. It is very important that there is a minimum contribution should be 6,000 rupees. UPSC can give the statement that there is no any limitation on the maximum and minimum investment, then that statement will be wrong. Understood? And every NPS account holder will be provided with permanent retirement account number, that is PRAN. And in this scheme, government is not going to contribute anything in your account. Whatever you are contributing, that only will be invested. Government is not going to contribute anything here. Understood? Now, in continuation of the National Pension Scheme, very important question or very important points from where the UPSC may frame the question, that whether one can exit from the NPS. Basically, yes, whether one can withdraw from the NPS. Yes, you can withdraw from the NPS before 60 years, and also you can withdraw after 60 years, but there is a certain kind of limitation. If you are getting out of a scheme before the 60 years, then only you can withdraw 20% of the accumulated corpus in the NPS. It simply means that you can withdraw 20%, and for the rest of the 80%, you will have to buy the annuity. Understood? At 60, for example, if you want to withdraw the money at the age of 60, then at least you need to invest 40% of the corpus in buying the annuity income. Understood? Now, the last one is who manages the funds. I have just talked about that this is pension cum investment scheme. Obviously, there will be some kind of fund managers, and you can change your fund manager anytime if you are not satisfied. If you think that they are not investing your money in a profitable sale, in a profitable stock exchanges, therefore you can change your manager anytime. Understood? Now, moving to the next scheme, that is Varish Pension Bhima Yojana. When it was announced? It was announced in the budget of 2014 and 15. And what are the benefits if someone is subscribing to the Varish Pension Yojana? Then he will obviously get some guaranteed return. Then what is the guaranteed return? Guaranteed return is of 9%. For example, if I am subscribing to the Varish Pension Bhima Yojana and contributing 10,000 rupees, then I must get 9% on 10,000 rupees. If there is any, you can say if there is any gap between the guaranteed return and the return generated by the LIC, then that will be compensated by the government. Then what UPSC can do in framing the question, that they can make the statement that it will be compensated by government, that it will be compensated by LIC, but it is not compensated by LIC, it is compensated by Government of India. Understood? Now the next question is, who will implement Varish Pension Bhima Yojana? LIC will implement the Varish Pension Bhima Yojana. And when one can withdraw, simply means that when one can exit from the Varish Pension Bhima Yojana, you can exit from the scheme after 15 years of the purchase of the policy. And the amount of the pension depends on the contribution. If you are contributing 10,000 rupees, then you will get the pension in proportionate to 10,000. If you are contributing 20,000, then obviously you will get more in proportion to your contribution. Okay. Basically, what happens in the Varish Pension Bhima Yojana, that they can give you pension quarterly, half yearly, and monthly. If someone wants monthly pension, then he needs to give more premium. If someone wants quarterly, then less premium. If someone wants half yearly pension, then less than the quarterly contribution. Understood? Now moving to the next scheme, that is Pradhan Mantri via Vandana Yojana. Who will be the beneficiaries of Pradhan Mantri via Vandana Yojana? It is exclusively for the senior citizen aged 16 years and above, which is available from May 2017 to 31st of March 2020. It simply means that Pradhan Mantri via Vandana Yojana came in 2017 and will be applicable till 2020 only, and it is available only for the senior citizen. Now, what is the maximum investment limit? Maximum investment limit is 15 lakh per senior citizen, and this senior citizen of 15 lakh comprises of individual plus a spouse plus dependents. It is not that, for example, if I have 3 members in my family, I am contributing 15 lakh, my wife is contributing 15 lakh, and my son is also contributing 15 lakh. It is not possible. What is possible here is that we can contribute 5 lakhs, 5 lakhs, and 5 lakhs, and the total should not be more than 15 lakh. But they can be the part of the Pradhan Mantri via Vandana Yojana. This is important to remember. And the policy term is of 10 years. Understood? Now, what is the minimum and maximum pension one will get? Obviously, it will depend on the amount of contribution one is contributing to the Pradhan Mantri via Vandana Yojana, but maximum and minimum pension will be decided as per that one will get a minimum pension of 1000 rupees per month and maximum pension of 10,000 per month. And what is the rate of return? Here the rate of return is 8%. And what we have read in the previous slide, that the rate of return is 9%. This is a way of remembering the things. It is not that you are memorizing the things randomly. You will have to relate the thing that I have read 8% and I have also read 9%. Where it was 8, where it was 9%. Whenever you are remembering the things in this way, it will be memorized for the longer period. Understood? Now, the continuation of the Pradhan Mantri via Vandana Yojana, does this scheme allow for the premature exit? Yes, simply that if you can withdraw from the scheme or not. Yes, you can withdraw from the scheme. But when you are withdrawing the scheme, then only 98% of the purchase price shall be refunded. For example, what is the meaning of purchase price here is, if I am contributing 10,000 rupees, then just we have read in the previous slide that the rate of return will be 8%. This 8% you will not get if you are going for the premature exit. You will get 98% of the purchase price which will be refunded to you. Understood? And again, if there is any shortfall between the 8% return, and then it will be compensated by the government of India. Understood? This is all about the Pradhan Mantri via Vandana Yojana. Now coming to the Pradhan Mantri Mudra Yojana. When it was launched? It was launched in 2015. What thing you can focus upon that? In some of the schemes, I am focusing on the year also, because this scheme has been launched in a very recent year for the last 4 or 5 years. Therefore, it has become too much important to remember the year also. Understood? Then, what is the objective of Pradhan Mantri Mudra Yojana? Pradhan Mantri Mudra Yojana will provide you loan up to 10 lakh. Then, who will be the beneficiaries of the Pradhan Mantri Mudra Yojana? The beneficiaries will be non-corporate, non-farm, and small and micro enterprises. It is not that Adani will go and will ask for 10 lakh rupees under Pradhan Mantri Mudra Yojana. However, Adani will also not go for 10 lakh rupees. This is also the reality. Now, the next question is, who will give the loans? These loans will be given by commercial banks, RRB, a small finance bank, microfinance institution, and non-banking financial corporation. Understood? It is not that these loans will only be given by SBI and PNB. This can be given by SFB and RRB and MFI also. This is very important to remember here. Now, what are the important points you must ponder about whenever you are reading Pradhan Mantri Mudra Yojana is that if you are going to be the beneficiaries of Pradhan Mantri Mudra Yojana, then you will be provided with Mudra debit cards. And using these debit cards, you can withdraw the loan from any ATM in India. And there will be three categories, that is Sisu categories, under which you will get the loan up to 50,000 rupees. Under the Kishore category, you will get loan up to 50,000 to 5 lakh rupees. And under Tarun category, you will get the loan from 5 lakhs to 10 lakhs rupees. And the new institution, that is Mudra, that is Micro Unit Development and Refinance Agency Limited, has been set up by the government, which will be the implementing agency of Pradhan Mantri Mudra Yojana. Now this is the last scheme, and why I am focusing too much on sovereign gold bond scheme, that this is not only important for the prelims, but UPSC has asked the question in mains also with respect to sovereign gold bond scheme. Understood? Now the very first question is, who issues sovereign gold bond scheme? RBI issues sovereign gold bond scheme. And who is eligible to be the beneficiaries of sovereign gold bond scheme? Any individual, but it is restricted to the resident individual. It is not that the beneficiary will be OCI card holder or the NRI. Okay, only those who are living in India and Hindu undivided family and any trust, any universities and charitable institution can be the beneficiaries of the sovereign gold bond scheme. Understood? Now, what is the maximum and minimum limit of investment? The maximum and minimum limit of investment is 1 gram and 4 kg for individual and Hindu undivided family. However, for the trust and the charitable institution, the maximum limit is 20 kg. Understood? Now, what is the tenure of the bond? The tenure of the bond is maximum of 8 years, and there will be an exit option after 5 years. You can exit from the sovereign gold bond scheme, and you will get your payment up to 20,000 rupees in cash. But whenever the return is more than 20,000, then you will get it through the demand draft or the check or electronic banking. All the information which I am putting here, from here the UPSC may frame direct option. Understood? In continuation of the sovereign gold bond scheme, what will be the interest rate? The interest rate will be 2.5% per annum. And can the bond be used as a collateral? For example, if I want to take the loan, can I take the loan from the bank by using this collateral, by using this gold bond scheme? Yes, you can use the bond to take the, you can use the bond as a collateral for your loan. And there will not be any capital gain tax, but the interest on the gold bond will come under the income tax 1961. Simply means that it will be taxable. And the last scheme is Tejaswani. Tejaswani is basically what you need to focus upon here is that what is the eligibility criteria to be the beneficiaries of Tejaswani. And what I think that this is very important here is that whether it is applicable on the pan-India basis or not. First of all, it is for the adolescent girl and young women only. It is not even for the adolescent boy. It is for adolescent girls and young women in the age group of 14 and 24. Okay, and inclusive of both these ages, 14 and 24. And it is implemented in district of Jharkhand only. They can make the statement like in this way, that it is implemented in the northern plain or it is implemented in the Gangetic plain. That statement will be wrong. It is implemented in the Jharkhand, and project has been started in 2017 and will end in 2021. This three information is very important. Remember, this is just an added information on Tejaswani, but what I think that these three information is very important, and the components of the Tejaswani is obviously whenever you are focusing on the welfare of adolescent girls, you will have to focus on expanding their social, educational and economic opportunities, and you will have to build the state capacity and implementation of all the efforts conversely so that we can achieve the welfare of adolescent girls and the young women. I hope you are liking the series. In the next video, I will deal with the next two important ministries and the schemes which were in the news from the May 2019 to May 2020. Till then, goodbye, stay safe.